emerging market stocks today, they fell for the fourth consecutive trading session. For example, China's Shanghai Composite Index, it declined 2%. That was the most in 2 weeks. So just how bad is the slump, and does it create opportunities for investors? Let's find out more from Jason Press. He is a vice president and equity strategist for global emerging markets at Citi Investment Research and Analysis. And he's #1 for equity strategy in the 2009 Greenwich Survey for Latin America. Jason, good to have you with us on Bloomberg.
Thank you, Pimm. Nice to be here.
Before we get into the individual markets of China and Brazil, Latin America, and so on, what about the interdependency that exists in the emerging markets? Because we often hear about how, emerging markets, they produce goods that they then sell in the United States. How much of the emerging market story is really a domestic story for each of the individual economies, selling and trying to raise the living standard of their own people?
It's actually a very good question. We actually see that the interdependence is rising with time. In the past, you've gotten major domestic demand being the boom for the growth in Brazil and in China, but increasingly the larger economies as well are interdependent amongst themselves and not just on developed markets. So if you're going to make a call on emerging markets, it's best to make a call on the asset class overall, whether or not you're going to be bullish as we are or bearish at any one time.
So the idea being that there's that burgeoning middle class in places like Brazil, but indeed it also relies on trade between places like Brazil and China, for example.
Absolutely, and especially for Latin America, which is a commodities exporter, and Asia, which is a commodities importer, the interconnection is most obvious.
Now, you talk about commodities. Those are things like what, iron ore, as well as copper, particularly in Latin America?
Exactly. Iron ore is important for Brazil, which is the largest equity market in Latin America. Copper is important for Chile. And then for Mexico, you've got manufactured goods, which are produced not just for the United States, but also for Europe as well as for Asia.
And what's the outlook for the actual equity markets in a place like Latin America right now? I mean, have they, in a sense, been insulated a little bit from the market turmoil that we've experienced here in the United States?
A bit, especially for Brazil, which is much more of an autarky than other economies within Latin America. We're actually neutral on Latin America within our global emerging markets portfolio. We have a preference for Asia, where we see U.S. dollar returns from now to year end of about 15 to 20%. Latin America may be a little bit more moderate than that. And then finally for EMEA, we're expecting returns probably around 10-15%. But within Latin America, we do have a preference for the higher beta markets, being Peru as well as Brazil.
Peru and Brazil in Latin America, but you mentioned Asia, and I know that you've just spent some time in Korea, because we talk about Asia and we just tend to always focus on China, but there's a lot more going on. What about some of those other markets like Korea, for example?
We like Korea, we like Taiwan. Korea, actually, the export activity has held up better relative to other economies within Asia. For example, we do therefore like Samsung Electronics as a stock that's on our model portfolio of preferred stocks. Within Taiwan, we like TSMC. We are sticking with the bellwether companies because of the churn that we're seeing in the markets currently, but we'd probably be the bigger buyers come the fourth quarter.
What about a country like India, for example? The stock market in India doing much better than the stock market in China. Is it because everyone has decided that India is really going to expand and economic growth there is going to accelerate?
India does have decent economic growth. We're seeing about 8% GDP growth for this year. The problem with India is that a lot of that is already priced in, and therefore India is our largest underweight. It's not to say it's going to see negative returns. It's just we'll see better returns in places like China, where we are neutral, or Taiwan or Korea, where we're overweight.
Now, Taiwan and Korea, how much are they dependent on what happens in China? Because those are big trading partners, whether it's Taiwan with China or South Korea and China.
Increasingly, and we actually do like those export sectors more within Korea and Taiwan, partly because of the growth that we're seeing in places like China and India. Not to say that you can't oversee some of the services sectors, some of the banks, but we do have a preference for the commodity as well as the technology exporters.
What about some of the other countries in Asia, such as Malaysia and Indonesia? Are you seeing that the growth there is starting to pick up as well?
Malaysia, we do see decent growth, and we do have one or two stocks in our model portfolio that are Malay stocks, including Tanjong, which is a utility company. We like it for its defensiveness. Indonesia right now, we actually have very little to no weight.
Little to no weight in Indonesia. Why is that?
Well, it's a small market to begin with. And we're also just seeing better growth opportunities elsewhere amongst the bigger, higher product exporters, like the technology companies, rather than the commodity exporters and the consumer staples companies that you have a lot of in Indonesia.
Now, in emerging markets, you get to include what's happening in the continent of Africa. Is there any outlook that would make investors want to pay attention to what's happening there?
Well, the one market that actually is included in the MSCI benchmark for global emerging markets is South Africa. And we do have some exposure to the banks, the financial sector in South Africa right now. I know our analysts also do like the gold stocks. Anglo is on their recommended list for South Africa. Apart from that country, the other markets are going to be considered frontier markets and not necessarily my own area of expertise.
All right. And the Middle East right now, how are you viewing that?
Middle East, again, it's not part of the Global Emerging Markets Index, but Andrew Howell does cover that for us, and he does see select opportunities. He sees greater opportunities in places like Russia.
Oh, in Russia. All right. I want to thank you very much. Jason Press coming to us from Citi Investment Research and Analysis, sharing some insight into what's happening in emerging markets. Thank you very much.